Well, hey there. Welcome, ladies and gentlemen, juveniles and crocodiles, to the Animal Donut Channel. I'm your host. My name's Jeff. And today we're going to talk a little bit about one of the new stocks that has made it into the portfolio this year. And if you're new to the channel or you haven't seen any of the videos before, I decided to come up with a 10 stock portfolio at the start of 2025. And on the first day of every month, I just put the same amount of money into each of 10 stocks. Now, as I've gone along through this process, I actually found another company that I really love. So I added that into the portfolio. So now it's technically 11 stocks. And what I do is each month I've been telling you guys about each of the stocks because I just didn't want to reveal it and give away all the magic on the first day of the year. I thought it'd be fun to kind of let you guys know little by little each of the stocks that have made it into this portfolio. Summer 2025, put it in the comments and just say hello. It's always great to hear from you guys. And I also like to know where in the world you live. So maybe tell me what you're doing and the city or country you live in. Okay. So the stock to be revealed today, I'll just tell you the ones from memory that I've already told you about. I've been investing in Vistra Energy, Vital Farms, Sterling Infrastructure, Sprouts Farmers Market, Quanta Services. Primoris Services. For the next stock, it is Onto Innovation. And this is a really interesting company. Onto Innovation, their primary focus is called process control. They make equipment for the semiconductor manufacturing industry. And in addition to process control, they make equipment for metrology, which is just a fancy word for measurement, and inspection, defect inspection. Because if you're making semiconductor chips, you don't want to make any mistakes. So it's really, because if you make a mistake, it can just ruin the whole batch of chips that you're making. So you need to be able to find these defects early. That's what Onto Innovation does. Now, there are a couple other companies in the world, there's several others, that make similar machinery, but I like Onto because of the size. So one of the companies that also does process control is KLA Corp, but that's more than $100 billion company. It's a really big company. I like Onto Innovation. It's smaller. It's, I think, a more nimble company. And also there's just that chance of growing. Doubling in size is easier if you're a 10 or 15 or $20 billion company than if you're already 100. Interesting fact, Onto Innovation is a relatively new name, and this company was formed as the merger of two companies. One was called Rudolph Technologies, and the other was Nanometrics. And when the two companies came together, instead of calling it Rudolph or Nanometrics, they just call it Onto Innovation, based in Wilmington, Massachusetts. And I started investing in this company actually last year, and I just really liked the company. And so this year, when it came time to make a new portfolio and only invest in 10 companies, this was the one semiconductor industry stock that I chose. And this is actually the worst performing stock in this portfolio so far this year. So you'd say, well, aren't you discouraged, that your stock is down? Well, I've been buying it every month throughout the year. So I've been buying it at different prices. And I actually like buying shares of this stock or any stock when it's cheap, because I think if the company is solid, then a lot of times it's kind of, when I say solid, I mean profitable. They have like a nice list of customers that they serve, and they're not in risk of going out of business. So when temporary things like tariff concerns and things hit and drive the stock down, I just see that as an opportunity to buy more. Anyway, every month, first of the month, I buy shares, 11 companies. Onto Innovation, I bought these shares yesterday, which was July the 1st, at $99.77 per share. And as of today, they're at 102.20, I think. Is that right? Yeah, somewhere around there. So they've held up. It doesn't really matter. It's too short of a time period to mean anything. This portfolio continues to do really well. The return of the overall portfolio is 18.75% so far year to date. But what's funny is it was actually a lot higher than that very recently. It was over 20%. But what happens is when I add new money to the portfolio on the first of the month and then buy stock, the overall amount in the account grows so that whatever my returns have been year to date is a smaller percent. So since I put in a bunch more money on July 1st to make those investments, I went from a total return of maybe 22% or more down to 18.75. It's not a big deal, but it just goes to show you when you add new money and that money hasn't had a chance, for example, to go up when the stock prices are just, the day of the addition, the portfolio's return drops because that new money hasn't had a chance to increase in value. But no big deal. I think this year has been just a spectacular year. I attribute some of it to luck. I think some of it is I was more thoughtful about the stocks I bought this year. Last year, I focused on semiconductor stocks, and those did really well for the first 6 or 8 months of the year. And I also invested in Aspen Aerogels last year. And then towards the end of the year, just a lot of these stocks came down. And I think even though some of them have rebounded this year, overall, investing just in the semiconductor industry was, I think, a lesson in that I don't really want to invest in such a focused way into one small part of the stock market because, it's just, I think, a high risk proposition. If it does great, well, that's fantastic. But if it doesn't, sometimes you focus on the fact, like, why did I buy 10 semi stocks, So in this year's portfolio, I have 11 stocks and only one of them is in semiconductor industry. This is Onto. And so it's a lot easier to handle when this particular stock is down 38% because it's just one of 11. And the other stocks are doing real well and pulling their weight. And so that's sort of how this goes. One other thing that I wanted to point out to you guys is that Onto Innovation is not the only company that I've invested in that's focused on metrology and inspection and process control. So two of the others I invested in last year, and they were Camtech, which is an Israeli company, and NVMI, which is Nova Limited. And that's also involved in process control and metrology. So Onto Innovation here in Massachusetts in the US, and then Camtech and NVMI, Nova, are all in the same industry. They're competitors. And that doesn't bother me. In fact, I kind of like the fact that I already have positions in Camtech and Nova from last year, and now I'm investing in Onto. And the reason I like this is sometimes you can get the industry right, but you don't pick the right stock. And so you feel kind of left out. Sometimes you pick the industry and the stock. So anyone who's invested in NVIDIA, for example, knows what that's like. They somehow knew that GPUs or semiconductors would be a good place to be, and then they picked NVIDIA. And that's like a double whammy. But sometimes you might be right about the industry, but not pick the right stock. So I think what I like about this kind of sector exposure by having, 3 companies in semiconductor equipment manufacture is that, if Camtech isn't the winner, but Onto is, or if Nova does really well and Onto does, but Camtech doesn't, I'm still covered. So I think a good way to look at investing is not trying to, hit the home run with loaded bases, not trying to get the grand slam, but trying to get exposure to the industry or the sector that you want, and doing that in a thoughtful way, but not in a way that if the one stock you pick, you go all in on, if that one fails, then it doesn't affect you in any kind of emotional or financial way that's detrimental, I think the best approach to investing is when it's business-like. And by that, I mean not like gambling, not like going all in on things. I have friends who talk about, hey, you know what? You should just roll the dice on a couple of stocks. That's not me. I don't roll the dice on things. I think investing's best when you're emotionally calm, centered, thoughtful, and that way, you don't get these highs and lows. You don't get really upset if a stock goes down 10 or 20 or 30 or 50% because you kind of have a plan, and you didn't go in 50% on a stock where you were investing a lot of money. Let me put that a different way. You didn't invest a lot of money in a stock that went down 50% so that you're bummed out. Maybe you took a chance you weren't quite sure. For example, with me and Aspen Aerogels and also Excelis Technologies, I invested in those companies and I didn't know for sure how either of those investments would do. They were kind of experiments, and both of them so far have been, big negative investments. But they were such small amounts, and I wasn't really that heavily, I wasn't emotionally involved in the outcome. I was more intellectually curious to see how they'd work out. So even though they haven't so far yet, I keep my positions in Aspen Aerogels. I haven't sold any. I keep my Excelis Technologies. And I've noticed that some of these semi stocks from last year that did pretty poorly last year are actually doing really well of late. And I'll just point out a few of those. Looking here, today was July the 2nd, 2025. Camtech, which I mentioned earlier, is up 6.68% today. STM Microelectronics, big loser last year, up 5.42% today. On Semiconductor, I don't own that anymore. That's up 4.38%. Allegro Microsystems up 3.84%. Aspen Aerogels up 3.26%. Onto Innovation, which I mentioned, is up 3.15% today. And NVMI is up 2.98% today. And this is compared to the S&P 500, which is only up 0.5%, 0.47%. So as you can see, these stocks in the semiconductor industry are up between 6.68% and 2.98%. So the average there is somewhere above 3 or 4%. And that's just because I didn't give up on a sector that was downtrodden last year. I didn't throw the baby out with the bathwater and sell them all at all-time lows. I did sell some of my semi stocks, but I held on to about half of them. And I'm glad that I didn't act emotionally and get angry at the losses and sell, because as you can see, they weren't bad companies. It was just the economy and the market hasn't been favoring semiconductors from, say, the fall of 2024 through the spring of 2025. But here we are in July, and I think we're seeing a little renaissance here of some of these semiconductor stocks. So that's what I have to share with you today on the topic of Onto Innovation and also the 11 stock portfolio. I don't know if I'm going to have another year of returns that are in the 18.75%, and it's only good in relation to the S&P 500. If the market's up, 18% and you're up 18%, that's not a big deal. Your portfolio is basically mimicking what the S&P or the overall market's doing. But the S&P 500 is up 5.22% so far this year. So if I'm close to 20%, this is quadruple what the market is providing. And so my only decisions to make are, do I need to do anything? And despite all the noise out there, I have friends who I like to chat with about stocks, investing, and technology, and some of them are like, you know what, you need to sell some of these and then find some other stocks and roll the dice on them. And I just have to insulate myself from that thinking, because that's, the common sense approach to investing is, diversify, and keep turning things over and sell and find something else. But I think the common condition is kind of ignorance and stupidity. So if you listen to that and you take part in it, then your results are going to be, really mediocre. So instead, I just tune out what I consider the noise, and I try to stick to the signal, which is, if you pick a great company, you only have to make one decision, which is to invest in that company. But if you decide to sell, then you have to make different decisions. First, you have to buy it. Then you have to decide to sell. You have to decide then what to buy next, and you have to decide when to buy next. So then you have all these decisions, and nobody's able to time these things that well. Even though people talk good games, nobody really knows when to sell their stock and when to buy the next stock and which stock to buy. These are all hard decisions to make. So I think if you can just make the buy decision right, you can just sit on your ass and let the compounding, take effect over time. And that's what's happening right now with this 11 stock portfolio. Is it's gone up a lot this year, and I think it's just because these are great companies and they're profitable and there's a lot of demand. They're not flashy. They're not the Mag 7. These are, for most part, companies people haven't heard of. Talk to your friends, ask them if they know what Primoris Services does, or Onto Innovation, or Vistra Energy, maybe. Vital Farms, probably not. And, Sprouts Farmers Market, Sterling Infrastructure. No one's heard of Sterling Infrastructure, probably. So I think finding these small companies that are profitable and growing and learning about them. And, when you have a good sense of what they're doing and that they're profitable, they're doing well, you got to trust your intuition. Of course, verify. You've got to do the research to have confidence in your intuition. But that's what I have been doing all along, and it seems to be serving me pretty well. So thank you so much for watching. Please just put a comment, a couple words. It's always great to hear from you guys. If you haven't yet liked the video and you did like it, please tap the like button. And if you're not yet a subscriber, it would be great to have you as part of the channel. So do consider hitting the subscribe button and the notification bell. And then you will get a little, the little things that show up on the top of your phone, and they say, hey, Animal Donut, new video. Check it out. Thanks so much for joining, and I will see you in the next video.